Yeah, doing good.
Okay, great, great, great. Uh, resume to a new chapter, and in this chapter, we are going to look at how the stock market works. So in the previous sessions, we were looking at how the bond or the debt market work. And we looked at the functions of or the role that demand and supply play in determining the prices on these bonds and later on the interest rate, how it affects the interest rate. So in this session, we look at the stock market. We look at the stock market. And bear in mind that for companies, they have two ways of raising finance. Either they resort to the debt market by issuing bonds, or they either issue stock to raise capital to finance any project or any investment you like to undertake. And here we look at one aspect, that's the equity market or the stock market. Good. And when we say the stock market, unlike the bond market, the stock market gives the investor the opportunity to become part of the company. Yeah, because they are buying shares, they own a portion of the shares, so meaning that they basically have some form of ownership. Yeah, some form of ownership in the company. So before we end everything, or by the end of this chapter or unit, you should be able to know the meaning and importance of stock market and how it operates. If a company would like to be listed as a public company, or if you're first time being on the market and you would like to be on the Ghana Stock Exchange, that's some of the procedures, some of the requirements of how to being listed. Then we look at the efficient market hypothesis. I'm going to look at the three hypotheses over there. We also look at the role of central bank in regulating the supply of equities. Then lastly, look at some of the supervision. That is the on-site supervision and the off-site supervision. Later on, we end by looking at some of the tools the central bank uses in regulating the supply of money in the economy. Yeah, because they need to achieve uh, maximum fit between the supply so as to control inflation. That's control inflation in them.
Sir, please, you are not
On
seeing
a-
the slides on the screen. No.
Yes, yeah, I'm not going to project slides today. Right, so I'm going to do a lot of items today, yeah, because you'll
And
be
it
doing
seems
the
your
reading of
volume too
most.
is low.
My volume is down. Is it
Yes,
okay right
please.
now?
A little
Is it
bit.
okay? Oh, hold on, I'm
Can
coming.
you increase it more?
Okay. Hello, can you hear me?
Yes, sir. It's okay now. Please,
It's
where
okay
are
now.
we?
Okay. So basically, I was just doing some introduction about what we are going to look at. So it's not gotten anywhere. Yeah. So I'll let you know as we progress so that you can follow it, your manual you have. Very good. Okay. So with that much, let's kindly start the actual thing. So when you see the stock market or the equity market, as I've already indicated for stock, they give the investor to be part, they give the investor portion of the company. Yeah, so basically, it's an investor. If you own a share, then we are saying that you are a part owner of the of that company. Yeah, you share some form of ownership in that company. So unlike the bondholder, for a bondholder, you though you are an investor, yes, of course, you bought an asset of the company. You are not the owner of the firm. You are more of a creditor to the firm because you are giving money to the firm. And because you're a creditor to the firm, you are not entitled to the what to be part of the what, company. You're not considered as what you don't share any form of what ownership in the what in the company. But for a shareholder or for someone who has shares in the company, you are considered to own some form of what membership or ownership in the company. How you good with that? So that's the difference between being a bondholder or a debt holder to a stock holder or a shareholder. Good. Fine. So when we come to the equity market too, it doesn't operate in a vacuum, yeah, especially Ghana here. For Ghana here, we have what you call the Ghana Stock Exchange. We have the Ghana Stock Exchange. So this Ghana Stock Exchange, they are the ones responsible for regulating all listing activities. So if you want to go to public, when I say if you want to go to public, don't shift your mind to those government-run companies. No, you are private companies. So when you say private companies, they are those ones who don't float shares publicly. Yeah, unlike the public ones, you would see them. I'll show you how you are going to look at it. But that's why I was saying I'm not going to project much of the slides here because this one is much more practical. Yeah, they are available to us. So anyone with a smartphone and an internet connection can access this platform and learn more about them. Good. So in Ghana here, there's somebody responsible for regulating these listing requirements and these public companies is the Ghana Stock Exchange. So any company that would like to be on the Ghana Stock Exchange, either for the first time or perhaps you are a private company and you would like to convert to floating shares, then you need to go through this body procedure, the lay down procedure, what we call the listing rules, the listing rules. And bear in mind, there are some other requirements too you also have to fulfill before you are being listed on the Ghana Stock Exchange. And once again, the stock market gives you the opportunity to do what? To be part owner of of a business. So if you buy a share from a company, then you are a shareholder or you're considered to be a part owner of the company. And per the listing requirements or per the rules on the Ghana Stock Exchange, uh, you can't buy directly from the company. Yeah, you can't buy directly from the company. So for you to be able to trade on the Ghana Stock Exchange, you will need one person called the broker. Called the broker. Yeah, others you have other look at other stock exchange. You have what for a dealer. So we are going to also look at the difference between a broker and a dealer. So Ghana here, you need a broker. You deal with a broker. So who is a broker then? So a broker is it could be a firm. Yeah, they are firms. Normally they are firms, and their main purpose is to connect buyers and sellers of these shares, and they charge a commission. And the commission they charge is what is brokerage. They charge a what brokerage. That's the commission they get by linking you the buyer and the seller, so that a transaction can happen. That's a broker. And here they are, we have a lot of broker in the Ghanaian market, in the Ghanaian financial market. For me personally, I use IC Road. So I'm coming. Let me open my account so that I'll see what I mean. I use IC Road. So please hold on so I can demonstrate that for you. All right. Can you see my screen?
Yes, sir. You can see.
Yeah. So yeah.
Yes,
So
sir.
me personally, I deal with this company. I don't remember last time I came here though. So this the IC where they are also a broker, security broker. That if you would like to deal with any shares or buy shares from any listed company on the Ghana security, you have to come here. They have their platform. You have other platforms there. There are a lot of them there. Even my accounts now is negative 550 of them. So let's look at them. So the companies on the Ghana Stock Exchange, here are these. So you have the car banks here. So car bank currently, though the market is closed now, the market is closed. So currently they are trading at one share, they're trading at 0.8 Ghana cedis. 0.8, that's 80 pesos so per share. So if you like to buy a share of car bank, it's trading at 0.8. So this broker that I see what you place a trade or you buy, and they are going to look for someone who's also selling, shares. Then they'll buy from the person. That's how it works. So the Ghana Stock Exchange more like it serves as so let's say a secondary market, yeah, because after the company are done issuing their shares for the first time, that's the IPOs. The secondary market, that's the
Hello, Fran.
hello mom.
How are you doing?
Yeah, please I'm fine. Please how are you?
Yes, I'm also doing well. Hello, class.
Hello,
Hello,
madam.
madam.
I miss you guys. I miss
Hello,
you
ma'am.
all. Sabina, Justice, who else?
Hello, madam.
I see Bright, Phyllis, Gifty, Edward, George. Please, how are we doing?
Yeah, fine, thank you. What about you?
Please, can you hear me? All right.
Hello, madam.
Please, where are the rest of your members? Because I see the class is really every time. What happened?
Yes, please. It seems your network is a bit
Hello?
breaking. Hello. Hello, madam.
Yes, I was asking that. Can you hear
Yeah, we
me?
can.
Yes, can you hear me?
Yes, please.
I see that the number keeps dwindling. Please, where are the rest of the classmates? Where are they?
Madam, please, some are dining now because of the network.
Okay, it's because of network. Like anytime there's class and I join in, I see only 13, 13, 13 has been constant, 13. This is not right. So please, the various reps from the various centers, kindly entreat your people to be joining class. Is that okay?
Okay, noted, madam.
All right. Okay. So I'm in class and I have another class. So I'm in both sessions. Is that okay? So permit me to be quiet and listen to what Francis is saying.
Yes,
All right,
madam.
Francis, you can take over.
So as I was saying, they have the broker page over here. So anytime you like to buy, you can buy from there. So they are the ones who will link you between finding someone who would like to sell the shares and someone who would like to also buy the shares. And they do that at a commission. So you see here, though, they stated that it's 80% per share, but actually when you go there, there's a charge they charge you per the quantity you are going to buy. So that fee they charge you is for the broker's commission or the brokerage. In short, that's what we call the brokerage. And bear in mind, even though they are all operating on the security market, as in the Ghana Stock Exchange market, they are being bounded by rigid regulations. Other than that, you would see a collapse in the market. I mean, they lead everything. There are no rules, there are no regulations regulating the stock market. Then there will be a collapse. Let me say, yeah, there will be a collapse in the market. There will be a collapse in the market. So anytime the market tries to, I mean, or a company tries to, yeah, who has raised their hand? Anyone? Francis.
Yes, sir. Please, I wanted to know if Ghana Stock Exchange, do they also trade fixed income securities?
Yeah, they have fixed income securities.
Oh,
They have
okay.
it.
So it's not only stocks that they trade.
Yes, yeah, it's not only stocks that they trade. It's not only
Oh,
stocks
okay.
that they trade. Let me see. I think they have fixed income securities over here. So these are the fixed income securities over here. We have the government of Ghana, FIN201D, but they are there. And I think they were about to introduce another coin or something like that. Yeah, they were about to introduce another coin, I mean, the USD and stuff. But time goes to the market will be evolving. Yeah. So it's not only shares that they trade there. Not only shares.
Hello,
But,
sir.
you know, yes, please.
Hello, sir.
Yeah, I can hear you. Please speak.
Hello. Hello.
Yeah.
Please, hello.
We are listening.
Hello, sir.
Please speak.
Hello, Gifty, please talk. We can hear you.
We can hear you, Gifty.
What's on
Okay. Please, sir, I'm having a little challenge with my network. So please, where are we?
We are on Unit 1, Session 1.
Oh, okay. Okay.
Yes, Unit 1, Session 1. Unit 1, Session 1. All right,
Yes, you
let's
finish-
proceed.
finish
So this,
one.
so now this how. Sorry. Unit 3, Session 1. Thank you. Unit 3, Session 1. That's you're looking at the Ghana, the stock market and central bank. How it goes. Madam, you see how it goes.
Sir, please, yes, I'm okay. But just that I'm having a little challenge
Okay.
with my network this morning.
Oh, sorry about that. All right, let's proceed. So this is how the stock market thing, just a brief, some this how I've explained how you can trade in the Ghana stock market. And it is for the rules. Some other stock market, I don't know for sure. That's when they can directly trade with the company. But here you need a broker. You need a broker to be able to buy or sell a business in the Ghana stock market. Now let's look at some of the importance of the stock market. Yeah, let's look at some of the importance. So we will look at the importance of the stock market to you, the investor, the one going to buy shares from the company, and to the company, and also to the economy as a whole. So you, the investor, what are some of the benefits you are going to get from trading on the Ghana stock market? So one benefit is the protection of investment. The reason why we are saying that it's protection of investment is that the Ghana stock market is being guided by what rigid rules and procedures. You can't just do anything. You can't just get out and do anything. Unlike the what we do on an unregulated market where anyone like even though the Bitcoin is regulated, I mean the central bank is trying to regulate it, but still they are still facing, I think they are still facing some 1, 2 challenges there because you can't easily regulate it like that. But for the Ghana Stock Exchange, you can't just come in or they can't just list you that yeah, you can now close this. No, like that. You need to meet some of their words. I'm also going to show you on their website. So you have the Ghana Stock Exchange. You have them over here. let's look at some of the things they have on their page. So basically, this more of their history, that it was established in November 19 to provide efficient security market for national economic development through access to capital and investment. So you can read something about it. You have the over-the-counter market and stuff. Then you come here, we have listing. So when I say listing, you're looking at how you can trade on the Ghana Stock Exchange, or how you can have your company trade on the Ghana Stock Exchange. So how to list is over here. So let me go there just for a short time. So become a Ghana Stock Exchange listed company. So how to get listed? First, shareholders must meet and agree that they must pass a resolution to change from a private company towards a public one, limited by shares. You see, we have other companies, we have an unlimited company, we have company, but because here you would like to float shares, you should be a company what limited by shares. A company with the help of external solicitors or in-house lawyers prepare a new company constitution, which conforms to that of the act of the company. That's the Company Act 2019, that's the new one. And also meet the listing requirement of the Ghana Stock Exchange. So these are some of the rules. Because of these rules, before you'll even be able to trade on the Ghana Stock Exchange, you would have met all this one. You can't just come in like that and be like, oh, I want to trade it. No. You must go through a deep scrutiny here. You must pass it through some scrutiny before you go to it. So even when we after listing, there are still some procedures you have to still follow so that you don't crash the market. So when that happens, you the investor, if you have somewhat more like some confidence in the stock market, because one is going to protect your investment. You can't just lose your investment like that. And the next thing we are going to look at is promote asset liquidity. It promotes asset liquidity. Once again, liquidity, you are looking at how easily you can convert your asset into cash. Now you bought stock. The stock is your asset, or you bought shares from the company. These shares are your assets. Let's assume that you need money immediately. You need physical cash, you need the cash to do your other things. So this stock market provides you the platform to be able to sell these shares for cash, like this one. So when you come here and you like to sell, you have this one. I've just hold on I had some in MTN and Cowback. I've sold everything. Let me press the data.
You should have waited for some time.
So if you like to sell all your shares for cash, you can still do that. Is someone talking? Or someone talking, please? Oh, the market is taking long to good. So it's here like this, Starbank like this. I just have just one share over here, just one over here. So if I would like to sell it for cash, I just place and sell easily. So they promote liquidity of your asset. Yeah, you can easily convert your asset to cash. The other benefit to you, the investor, is that they provide opportunity for seeking investment advice. Yes, the broker too. The firms over there too. If you like to talk to them one-on-one as to where or which company to buy your shares, they can also give you what expert or professional advice as to where to buy or sell your asset or your shares. Then another thing is that they can offer investment avenues for surplus spenders. Good. For surplus spenders. When you say surplus spenders, meaning that you just excess money over there and you are looking for other investments because you don't know how to use your funds, then this stock market provides you the opportunity for it to buy shares. So they are giving you the opportunity for it to spend the excess money you have. All right. Now let's look at some of the benefits to listed securities. When I say some of the benefits, we are looking at the benefits the company will get. This company, what are the benefits of the stock market to car bank? What are the benefits the market to the Anglo Gold Ashanti Depository Shares, to Access Bank, to AGB, to Palm Market? What are some of the benefits they are going to get from being listed on the Ghana Stock Exchange? The first one you're going to look at it provides them with the opportunity for raising what? Funds. Yes, because if I go here to buy shares, I'm basically giving them money. I go here, if I buy shares from Access Bank like this, I'm giving Access Bank what? Money. So it provides them with a platform to what? To raise money. One benefit is also free publicity. Yeah, we are listed here, so you can see here. It's more like we are making your company known to the general public. Because anyone who comes here to register can easily see the companies that are listed. You can see MTN is here. Good. MTN is here. You can see them. They are trading at 4.21 Ghana cedis. I can't say those Vodafone, they are not, they are private companies. You don't float shares, they're private companies. You can see Total over there, you can see Goy. When Goy to the also yeah. Goy to the also trading at 100 Ghana cedis 20%. So it gives you that publicity. Yeah. Then it also enhances your firm's reputation. Here we are saying that it is so because the stock market alone is being carried by strict regulations. Yeah. So you, the company, you don't get to do anything. You don't get to do anything that will favor you, the managers or whatever in the company. You need to follow some strict rules and regulations. And because these strict rules guide your operations, and it's more boosting investors' confidence. Yeah. And the effect it will have on the company so to increase the firm's reputation. Because if I come to you, the company, and you are listed, and I know that you are following rigid rules and regulations, one, I'll have some form of trust in the company, and two, it also boosts the firm's reputation. Also boosts the firm's reputation as compared to firms that are not listed on the Ghana Stock Exchange. Another one too, we are going to say is what improved governance structure. Improved governance structure. All right, here when you come here to let me see. All right, let's come to the listing rules over here. But I can see how so it's a whole document. It's a whole document. 90. It's a whole document. I wanted to show you the how it improved governance structure. You see, before listing, governance structure, you're looking at how the company is being governed and not controlled. So because we are listing, they would like to prevent what we call concentration of power in one person. The concentration of power in one person, that one person is responsible for everything. No, if you have different sessions, like different roles being given to a different person, so as to prevent those what we call conflict of what interest in the company. I think there's a document. So if you like to go through, you can go to their site and download them. You'll get some deeper understanding on how you get it and how it improves the governance structure. Yes. I mean, you don't just come with anybody. Yeah, you don't just come with anybody. Even if here, you will need some accountants, you need some solicitors and stuff. Which is here, yeah, the brokers, the lawyers, the accountant and stuff come together. Then another thing is that they reduce firm risk. Yeah, they reduce the risk. How are they able to reduce the risk? Because of the same rules and regulations governing the Ghana Stock Exchange market. The other benefit, now let's look at the benefit of this stock market, that's the GS to the general public or to the whole economy. How is it going to benefit the economy? Yes,
Does that mean individuals cannot buy shares directly from the Ghana stock market?
yes, yes, you can buy directly. If you want to buy, you will need a broker, you need an agent, a broker, and a broker would what would then link you more like a broker serves as a
A link.
yes, as a link between the company and the broker. As in, you the company and the investor who would like to buy shares from the company. You can't just buy directly. The platform I'm showing here is a broker, it's a broker's platform. ICO. You call them ICO. We have a whole lot of them. Let me search small company because yeah, so brokers in Ghana. So you can still search like yeah, licenses, then let me see, we have lots of insurance brokers and consultancy limited. We have a lot of them. I deal with these people. I see what securities. We have three brokers limited. So you can't directly buy from the company. You can't directly buy from the company like MTN and buying shares directly from the company. You need a broker to do that for you. You have a lot of them. You have a lot of them. You have the car brokers limited, you have the Ghana, like you have a lot of them. You have a lot of them. So if you like to buy shares, you need a broker to do that for you. That's where the regulations of the stock exchange. You can't buy that. You need a broker. I will go.
Yes, sir. Thank you.
Okay, now welcome. So now let's move on to the benefit of the securities to the general public. So for the general public, they promote economic efficiency. They promote economic efficiency. How are they able to promote economic efficiency? They do that by channeling funds, excess funds, from those who have surplus to those who have shortage of what funds. For instance, if I have money over there and I'm not using it for anything, but I would like to use it for share, I'll go and buy these shares. And you know that these companies they need money to undertake other projects. So I'll channel the funds, my excess funds I have towards those who have deficit what funds, thereby promoting what economic what efficiency. Rather than making the money sit there and what lie idle, I would rather use the money to buy shares, which these funds in turn will be available to what to this company to fund their project. So when this happens, there's what a greater efficiency in the market. Then there's what we call employment generation. Yeah, why those brokers we find over there, it's this employment for them. And you have the lawyers, the reporting accountant, the financial evaluator. It creates some form of what job for them. Yeah, creates some form of what employment for them. Then lastly, we are going to look at fostering economic development. Foster economic development. So if we have efficiency in the economy by using the idle funds we have there for other productive use, by giving people employment and stuff, there's economic development in the whole country, in the whole country and the whole economy. Then let's look at how the general stock market or the Ghana Stock Exchange works. How it works. For here, I would admonish you to go and read. You have them in the manual. Then I've also introduced their website for you to hear how to get listed and stuff. You have a whole lot of them. That's a whole lot of them. When you come here, listing requirements, they are here. That's a whole lot of. So I would admonish you to go and read them. So a company applying for listing on the main market of any class of shares is, as a general rule, expected to meet the following requirements. So first, minimum stated capital. It must have stated capital after the public quotation of at least 1 billion Ghana cedis in the case of application relating to the main market and 0.25 million to Ghana Alternative Stock Exchange. So we have the alternative stock at the gas and the main market. If you want to trade on the main market, you need to have 1 million Ghana cedis stated capital. But if you want to trade in the Ghana Alternative Stock Exchange market, that's the gas, you need to have 0.25 million Ghana cedis. That's 250, yeah, 250 Ghana cedis, 250,000 Ghana cedis over there. Then for minimum public float, shares issued to the public must not be less than 25% of the number of issued shares on the watch of the company. So these are some of the requirements. To payment of shares must be fully paid for, except in the very. So here, like this one, when I come here, I don't pay. I don't just pay. The car bank was in at 8%. I have to pay everything. I don't just have to pay like, oh, I have four cities. No, you pay for everything. You pay for everything over there. So the spread of shares. The spread of shares existing at the close of the offer should be GAC opinions adequate with at least 100 shareholders at the public offering stuff. So they are there. You have a lot of them. The same and stuff. And then you can go through them and stuff. So for if you look at your manual, you have section 2. So then section 2 talks about everything, how to get listed and stuff. So I would admonish you to read them. I would admonish you to read them. So yeah. Yeah, the same thing. The same thing you have over here. The same thing over here. So kindly read them. Read them. Let's know them. You also have the community markets too. That one too, I would also admonish you to do the reading because there are laws, there are requirements. Yeah, there's no way we can change them. All right. So please let's come to section 4. That's what I would like to talk about. That's the efficient market hypothesis. Efficient market hypothesis. Efficient market hypothesis. All right. So what is this theory about? What is this theory about? So this theory, but before I explain this theory, let's assume that you are an investor who normally trades in the Ghana cedis, and you're observing the prices and stuff. And let's assume that I come to you, I work in MT. Let's say you normally buy from MT. I work with MT and I call you, hey, could you mention in the next few days or next week, MTN shares will drop. MTN shares will drop. And you know that you hold shares in the company. What will you do? Let's say currently the shares were trading at 4 cedis. MTN shares are trading at 4 cedis per share, or Ghana cedis per share. And I come to you, hey, my friend, there's an information that the share price are going to drop coming Monday. They're going to drop to, let's say, 1 Ghana cedis. What are you going to do as an investor? What are you going to do?
You sell off the shares that you're having immediately.
Yes. You're going to sell off you're going to sell everything. In fact, you're going to sell everything because if it drops to 1 Ghana cedis, you are going to lose. And let's say you bought the shares at 2 Ghana cedis, you bought the shares and you drop it to 1 Ghana cedis, you're going to lose. So when this happens, we call this insider information. So insider dealing, or what you call the insider information, because there's a leak information that is supposed to be inside of the company and gone outside. So when that happens, you are beating the market. And you know that you can't beat the market. The Ghana stock is in the meaning that you can't beat the market. When you look at the requirement there, you find insider information. Those documents I've shown you and read them. The Ghana stock exchange prevents insider dealing. When they find that you've gone against one of their rules. Because insider dealing is prohibited in the market. Information that is not supposed to be known to the general public is being known to the general public, which is against the regulation of the Ghana stock exchange. And as I've indicated earlier on, that there will be a fall of the price of these shares. Basically, the wise as an intelligent investor, you're going to sell off all the shares. In the same way, if I come to you to tell you that, hey, MTN shares is going to rise to this or tomorrow, You're going to buy more of the shares. You're going to buy more because you expect that in the next few days it's going to increase and you can sell that at what? At a profit. And bear in mind, you are not there to benefit from the what? To beat the market to benefit from the market or from the shares. So this efficient market hypothesis revolve around the premises that all information available reflect the what price or the price of the share reflect all what information what that are what available. So meaning that there's no way you can beat the market. So the price is still over there on the Ghana's the car banks here. They reflect all information what available. Reflect all information available in the market, and it is what and it reflects the true wealth of the shares. That is the efficient market hypothesis. That's the efficient market hypothesis. So the efficient market hypothesis in short says that the prices in the market or the price of the shares reflect available information. Reflect available information. Good. We have three types of the market hypothesis. We have the weak form market efficiency, we have the semi-strong and the strong. So now let's take them one after the other. Let's take them one after the other. So for the weak form market hypothesis, so the weak form here, don't just stress. You are looking at whether the information is past, whether the information is current, or whether the information is what is a combination. We are going to look at all of them. That we know for the weak, let's take the one after that so that you get them well. So for the weak form market hypothesis, they reflect or the share price reflect only what past information. They reflect what past information. Good. That's one thing if you note about the weak form market hypothesis. That's why they are weak. The information is what is past. And one of the premises here is that I think you should go and read on the Doe theory. Go and read on the Doe theory. Let me forget the another screen. All right. So we have the weak form. Weak form. So the weak form reflects what past information. So past information you can use is what maybe you're looking at the trend of the MTN shares for the past 10 years. These are past information. So we are looking, some analysis can use this information to predict the share prices of MTN, though they are weak. I mean, you can't really, the stock market is unpredictable because they are determined by forces, the demand and what supply. So you can't easily use past information. First you can see what a movement in an price movement, and then we expect that in the next few years, MTN is going to rise. Yeah. You can use such information because the market can go up, can go down at any point in time. Then we have the semi-strong form market, semi-strong. So for semi-strong, it's a combination of the weak and publicly available information. So here it reflects past publicly available information. Past information and not publicly available information. Then for the strong form, that one it only reflects all available publicly available information. All information, whether the information is past, whether it's is public or whether it's is private. It reflects everything. So the semi-strong the strong form is normally considered as to reflect the true price of the security or the shares, as it include the publicly available or the ones that are not even public. Everything is in the strong form market hypothesis. Please, do you have any question on that? Do you have any question?
Hello, sir.
Yes, please.
So please, with a strong form, does it also predict any future information as well as any hidden or information as well?
Yeah. So it's just an hypothesis. It's a theory. eh, It's a theory that we are looking at. I mean, information about the share prices or prices of a security reflect the information. Good. When you look at the strong is considered let's say, uh, the highest, yeah, among the three because whether the information is fast, whether it is uh, present or publicly available right now, or whether it is private, the share price you are seeing they reflect all this information. And you can't, as I was saying that you can't believe this is a theory. Yeah, this is a theory. You're not doing the real finance here. We have seen that there are other theory that goes against this efficient market hypothesis. Yeah, I'm saying that you can't really predict that yes, the share price of MTN is going to go up by this amount in the next few years, in the next few months. You can't really predict. The only thing that's predict that is what is the demand and supply. Depending on the demand and supply, how the market forces play in the market or the stock market, that determines or that places the price. Though there are some other research that people use data, past information data to predict. Yeah, you can get it correctly. I mean, fine. If you get it correctly, fine. If you don't, fine. But bear in mind, this one is just a theory. I'm just looking at a theory proposed. Are you clear with that?
Oh, okay. Yeah. So basically, they are just
Yeah.
hypothesis. Yeah, you are just making
Yes.
some
Yeah.
assumptions whether to work or not. Okay. Okay.
Yeah.
Thank you.
Yes. Okay. All right. Now let's come to the role of the central bank. The role of the central bank of Ghana. Do you know that the central bank of Ghana, each and every country has its own central bank? And in our scenario, we have the Bank of Ghana as the BOG. So the BOG, they are basically responsible for regulating all financial activities in the economy and also regulate the supply of money. But they are the sole issuer of currency and the ones who determine whether we supply more currency in the economy or if you cut the supply of what currency in the or money in the economy. All right. When you look at the functions of the Bank of Ghana, we have uh, formulate monetary policy. And bear in mind, monetary policy, the only formulate monetary policy, in terms of something monetary policy, we are looking at how to regulate the supply of money, the supply of money in the economy. So they come out with what policies, they come out with what rules, come out with regulations as to how to regulate the supply of money. They basically do that to solve inflation or deflation. Yeah. So them regulating or coming out with this monetary policy, they are doing these two things: inflation or what deflation, or what you call the interest rate. Yeah. That's their main function and they do. They are also involved in stabilization of the currency. Yeah, that stabilization of the currency. And if you've been listening to the news, you see I don't know how to, but they are saying that the IMF, think that we are exhausting our reserves, our good reserves to stabilize the economy. I don't know how to use that. Yeah, because they do that. Then they will rather go and sell the good we have. See, when they sell the good we have, then they will have more of their dollars and stuff. Yes, because those ones that are buying the good, they will buy the foreign currency. So they have more of their currency area. That's why they are stable. I don't know how true that one is. Good. Then we have a lot of them. They issue and redeem currency notes. They supervise the payment and the settlement system. Those Ghana P and stuff you see over there, those East wage and stuff, they are also involved in that. They have to make sure that there's no fraudulent activities in there. They regulate all those things over there. All right. Then let's look at you can read on them. You can read on them. You can read on them. But my main focus here will be on their supervision function that I mentioned earlier on that you have two. You have the on-site supervision and the off-site supervision, and I'm going to look at their monetary policy. That's the only thing we're going to look at under the central bank. But for the rest, our monetary is also read. They are just ready. So when you look at on-site supervision, meaning that day in day out, the Bank of Ghana, as I told you earlier, they are responsible for the regulation of this financial institution, this commercial banks you see. But they must make sure that whatever activities they are undertaking or whatever activities for which they are registered to be financial institution, they are being adhered to. So sometimes they need a close monitoring. They need a close monitoring. That they need to go into their businesses to see, this is how they are doing operations. They have to make sure that you, financial institution, or you, the commercial banks, you are not counting any rules or any procedure. You are going by the legal procedure of the Bank of Ghana. So they sometimes come into your working premises or into your company's premises to observe how you are doing your things. They'll check your books, they'll check your financial statements, they'll check your operations and stuff. And they'll write a report about their findings they've seen. They've investigated in your business. So when they come personally to your premises, your business premises, they say that they are doing on-site supervision. They are undertaking on-site supervision. But when they require you, the company, let's say GCB, to be submitting monthly evaluation forms to them, or how did you go this one? They can ask you some questions in the evaluation. That is, without them being physically present at the premises, then we call that off-site supervision. Oh, submit this one to me. Can you give me a list of what you did in this month regarding your reserves or regarding the deposit or your loans? Then, because they are demanded, they are not physically present at the premises. We call that the off-site supervision. Are you good with that?
Yes, sir.
Yes, sir.
Okay, now let's look at some of the tools used by central bank to regulate the supply of money in the economy. Let's look at some of the tools used by the central bank to regulate the supply of money in the economy. So the central bank normally they deal with the monetary policy, whilst the government they deal with the government of Ghana will deal with what's called the fiscal policy. So the fiscal policy is about the taxation, the spending, and the stuff. But when it comes to Bank of Ghana (BOD), they use a tool called the monetary policy to regulate the supply of money in the economy. And under this monetary policy, we have several of them. We have the OMO, what we call the open market operation. We have the liquidity reserve or the cash reserve. We have the foreign exchange operation. We have the moral situation. We have a lot of them. Yeah, so don't just limit yourself to what we have in the manual. Yeah, you can read more. So let's go to look at just a few. How are they able to use OMO, that's the open market operation, to regulate the supply of money in the market? All right. So open market operation is more like it's buy and sell. That's what you have to know. It's buy and sell. So in short, open market is buy or sell by the Bank of Ghana. Good. So if you didn't want to let's take it from, if they want to increase the amount of money in circulation, they are going to buy. They are going to buy securities from from the general public. They are going to buy securities because if they are buying the securities from you and they are giving you money. So thereby they increase the amount of money in circulation. On the other hand, if they want to decrease the amount of money in circulation, then they rather sell. Because as they sell, they take money from you, the public. Are you getting the analysis over here?
Come again, please.
All right. So one thing I said, one thing to understand about the monetary policy is the Bank of Ghana is trying to regulate the amount of money in circulation. Because if there's more money in circulation, there will be higher inflation. That's more money chasing fewer goods. So they need to regulate this inflation and stuff. And I'm saying that we are looking at some of the tools they use to regulate this amount of money in circulation. And one of the tools is OMO, that's open market operation. Open market operation. And I'm saying that in short, open market operation has to do with buy or sell. Buy or sell. And take we are looking at from the perspective of the Bank of Ghana. Good. And I'm saying that if they would like to increase the amount of money they supply in the economy, actually they would like to supply more money in the economy so that more money gets to people's pockets. How are they going to do that? They are rather going to buy or securities from the general public. They're going to buy securities. And I'm saying that so they have BOG over here, Bank of Ghana over here, and we have the public over here. So if they want to increase the amount of money in circulation, BOG will come and what? Will buy. And as they buy, they are giving money to these people because they will need money to buy securities from these people. They are giving more money to these people. So as they buy securities from these people, then the amount of money in supply will increase. On the other hand, if they would like to reduce the amount of money in circulation, then they rather would sell. So they can sell T-bills, they can sell government bonds. So as they sell to these people, as BOD sells to these people, it takes money from these people. Because you, the general public, for you to buy the treasury bills, you need money. So it reduces the amount of money the general public have, and money will be given to what BOD. Are you clear? So they rather want to sell if they want to reduce the amount of money in circulation. Are you agree with that?
Yeah, yes, please. Thank you.
Okay. So another thing, I'm not going to look at everything. Yeah, this one, yeah, just clear explanation because of the tools. Another thing we are going to look at is the interest rate. Interest rate, what we call the monetary policy rate. Yeah, the monetary policy rate. So the interest rate, that the monetary policy rate. Let me look at the current monetary policy rate. Let's look at the current monetary policy rate on the aside Bank of Ghana. Let's look at the current monetary policy rate. Okay, so the current monetary policy rate is 15.5%. Do you see that?
Yes, please. We can see.
Yeah, yes. It is a current monetary policy, and inflation is at 3.8. But let's come back. So if the current monetary policy rate is 15.5%, good. And let's assume that Bank of Ghana would like to increase the amount of money in circulation, increase the amount of money in circulation. What does it do? Take note. The policy rate you see here is more like the interest rate because these commercial banks, the ADB, the EcoBank and stuff, people they also borrow from Bank of Ghana. They also borrow from Bank of Ghana. So this borrowing or this amount of money, this rate they are going to, they borrow at this rate, 15.5%. And bear in mind, this commercial bank too, they are there to make profit. They are there to make profit. So even though they are borrowing at 15.5%, but if they come and they take this money from Bank of Ghana at 16%, don't expect them to also give it to the general public at 15.5%. They also add a letter. Let's say they can even increase it to 70% or 16% or something like that. Good. So if the Bank of Ghana would like to increase the amount of money in circulation, what are they going to do? They would have to reduce this interest rate. So as they reduce this interest rate to let's say 12% or something like that, it makes it attractive to this commercial bank to come and borrow more. Come and borrow more. Are you good with that? So as they come and borrow more at this 12%, They also have to what reduce the, let's say, the initial 17% they were charging, let's say 15 or let's say 14 or percent. Then this at 14%, it also becomes attractive to the general public. Then they can also what borrow more. So if that happens, this change it increases the what, amount of money in circulation. On the other hand, if the central bank would like to what, reduce the supply of money in circulation, they rather would increase this 15.5% to let's say 20% or 18% or something like that. So if they increase this to 20%, then you, the commercial bank, it will demotivate you from coming to borrow. Are you clear with that? So you wouldn't borrow. It will demotivate you. And as it demotivates you to at 20%, if the Bank of Ghana is charging 20%, then if you, the commercial bank, if you come and borrow at this 20%, basically you're going to charge your customers, let's say 22%. And if you are 22%, it becomes expensive for the general public. So they also want to deter them from coming to borrow, thereby reducing the amount of money in circulation. Are you good with that?
Yes, sir.
All right. Then let's look at reserve requirement. Reserve requirement. Reserve requirement. All right. So when I say reserve requirement, reserve requirement, we are looking at the amount of money. Normally it's a percentage. Yeah. Sometimes the Bank of Ghana gives the directive that hey, other banks, when you take any deposit from customers, you are required to keep, let's say, just 10% of. You are required to keep, let's say, just 90% of it. Then you can give the 10% out. So they can manipulate this reserve requirement. Is someone speaking? Hello?
Hello?
Yes, please.
Yes. A question on the OM.
Oh, okay.
So I really want to understand why the Bank of Ghana would want to reduce the money in circulation, like in the economy. Are people not going to complain that oh the economy is hard and this and this and this? So why would they want to reduce the money in circulation in the economy?
Okay. Okay. So the sole reason why they do that is to control inflation. Oh, please kindly mute yourself. Okay. I think someone is talking in the background. Kindly mute yourself. Okay, thank you. So the reason why they do that, as you regulate the amount of money in supply, is inflation. Good. So assuming you have more money in your wallet right in your bank right now, you demand more goods, right? And you know that as you demand more goods and the economy is not able to produce to meet your demand, then there'll be inflation in the system. More like more money chasing what fewer goods. You have more money chasing fewer goods. If more money are chasing fewer goods, meaning that you are inflation in the system. Why? This is what will happen. Your suppliers or the producers of this, they are going to hoard some of the goods and they will demand more money. You get it? Let's say you were buying something at 2 cedi, and because they are not able to produce to meet your demand, and they are going to hoard some of the goods, they will be like, hey, I can bring about 50 cedis, something that you were buying at 2 cedis. You get it? So they do that to they normally what sell. So they will now sell this what securities to the general public to demand this excess money you have to reduce the amount of money you have so that you can use it to demand this product. I don't know whether you're getting the analysis over here. Because if you have more money in your hands right now, you can demand more goods. And you know that we Ghanaian, we don't have much production and stuff more to meet your demand. So the effect it will have on the economy is that there'll be more inflation. Because you're pumping money in the economy, you're pumping money in the economy. But meanwhile, to this money you're pumping in the economy, you don't have what the production capacity to meet the demand of the consumer, the ordinary consumer. If that happens, inflation will come into the system. Because you need the thing, then bring more money to buy the thing. Inflation. So to prevent that one, they would have to sell the securities to you so that you can be you can go and buy the securities and they will take that money from you. Are you good with that? Please, is your question answered?
Yes, sir. Thank you.
Okay, okay. So now let's come to the reserve requirement. So the reserve requirement, you're looking at the amount of money required by the Bank of Ghana from this commercial bank to keep or to give out as what as loan as good. So if once again, if the Bank of Ghana or the central bank would like to regulate the amount of money required, they can increase the reserve requirement. The reserve requirement. So what I mean is that assuming we have person A over here, and person A deposits 1,000 Ghana cedis in the account. You know that the banking sector is a business too. So the amount of money you deposit, they can use that amount as loan to earn interest. You get it? But take note that 1,000, they can't what give everything as loan. They can't give everything as loan. What if SNA comes back the following day to demand the 1,000? Where are they going to get the money? They are not good. So the reserve requirement is more of if you have received 1,000 and keep some and use some to what as a loan to what to other people. So if let's say the reserve ratio or the reserve percentage is pegged at 90% or 0.9 or 90%, meaning that whenever you receive 1,000 Ghana cedis, you'll be required to keep what 900 Ghana cedis because 90% times 1,000 is what 900 Ghana cedis. You'll be required to what keep 900 Ghana cedis over there on tag. After you don't use it for anything, keep it there. But the 0.1, which is 10%, is what you can use to what give loans to what other people. So 0.1 times 1,000 is giving us what 100, meaning that you have therefore 100 Ghana cedis available to give out as loans. Good. What if the Bank of Ghana, what if they would like to what increase the supply of money? So now we are looking at increase the supply of money in the economy. If they would like to increase the supply of money in the economy, then they would have to what decrease the reserve ratio. They would have to what decrease the reserve ratio. So using this example, so we have 10,000, and the reserve ratio here was initially pegged at 0.9. Because they would like to what increase the amount of money in circulation, they would have to what decrease this what 0.9. So if they decrease this 0.9 to let's say 0.7, now the reserve rate 0.7, which is 70%, then you just have what 700 cedis to keep as a bank after receiving this what 1,000 Ghana cedis as deposit. Then the remaining 30%, which is 300 cedis, you can give it out as loan. So now from 100 Ghana cedis what to what 300 cedis. Now we know that with the bank we have what more money to what give out. On the other hand, if they really want to decrease the amount of money in circulation, let's say initially they were at 0.7 or 70%, meaning that keep 700 cedis, you give out 300 cedis. But because they want to decrease the amount of money in circulation, they will rather increase this rate, let's say 90%, they increase it back to 90% or 0.9. So as they increase it back to 0.9, then the amount of money you have is 100 Ghana cedis. First, you keep what the 900 cedis instead of what the 700 cedis. So that's how the reserve requirement works or the reserve ratio works. Do you have any question on that? Any question, please? But this one, they are really, really practical. They are really, really practical. Any question? Okay. So you have a lot of them. I'm going to have moral switching where they will try to talk to this commercial bank as to how to regulate the amount of money. Moral switching more like they are trying to come into a consensus with them. We have a lot of them. We have the directive. They can give them the directive that say stop giving out loans. Yeah. About that and other stuff about it. Any questions so far?
Hello, sir.
Yes, please.
Please, I see this primary reserves and secondary reserves. Can you please strike the difference between both of them?
Okay. So the primary reserve is more of what I have explained. You get it?
Okay.
Yes, and as in that's the percentage, like more. I've given you a ratio. As in, I've given you a cutoff point. Keep this one, 90%, or and use 10%. But when it comes to a secondary reserve, they are not like a percentage. You know, the Bank of Ghana normally require them to keep them in more of a in a form of a security. Like they say, oh, the 90% you have, I would like you to keep them in the form of T-bills or government bonds or something like that. Are you clear with that?
Yes, please. So basically, the secondary reserve, Bank of Ghana will not allow you to keep that money, but rather they will allow you to
Yes.
invest it in another. Okay.
More like yes, more like yeah.
Thank you, sir.
Because if that happens, meaning that the cash is not available to you, you don't have money available to you.
Yes, yes. Okay.
Hello, sir.
Yes,
Please,
yes,
let me
please.
go back a bit. You mentioned that you're going to explain the difference between a dealer and a broker.
Oh, yes, yes. All right, thank you. So now let's look at the difference between a dealer and a broker. All right. So for a dealer, they are all intermediaries. They are all trying to link, facilitate buy and sell of the securities. But the striking difference is that these people, after linking you to buy the company to buy your, so you have they link the company and the investor together. Then they will charge what a brokerage, a commission. They will charge a commission called a brokerage. But at the same time too, they are just involved in linking, like you facilitate the trade between the company and the investor. But they don't have rights, as they don't buy the shares. You get it? They are not actual owners. They are not owners of what shares. They can't take control or ownership of this shares they are or the securities they are facilitating. Okay. But with the dealer, the dealer they can take ownership, or they can really buy this one from the company and sell it to you at a profit. Are you clear with that? That's the only difference.
Yes, sir.
Are you clear with that? Are you all clear with the dealer and the broker?
Oh,
A
okay.
broker.
So, sir.
No, sir.
Uh-huh. So
So,
basically, a broker. I'm coming, please. So a broker, then they don't have any right over the securities that they are selling. Then their main aim is to just facilitate the transaction. That let's find a buyer and let's find a seller, so that we can facilitate the transaction. But as to the security to the person or the security they are selling or they are going to trade, they don't have any right over it that they can claim ownership or something like that. But for these people, the dealer, they can claim ownership. They can actually go and buy the thing and come and sell it to you. Are you clear with that?
yes, please.
Okay. Any other question? Mr. Concern is coming. Want to speak?
Yeah, sir. Please, that is the monetary policy. Bank of Ghana uses the policy to influence things like inflation and then the loan rate that the bank service us.
Can you come again? How I didn't get the last part.
So how does Bank of Ghana (BOG) uses the
Yes.
policy rate to influence things like our inflation, and then
Inflation.
our loan, and then loan rate.
Okay. All right. So then the policy rate. I was saying that let's assume we have the central bank over here, the central bank, which is the BOD in question over here. You know that this BOD too, they are the should I say the supervise everything. They are the head of all financial institutions in Ghana. Good. And because they house everything, they are the regulators, they house everything. These commercial banks too, what we call the GSTB, the local bank, and stuff. Do you know they will also come to BOD to borrow? Good. So the monetary policy rate we checked, which was checked at 15.5% per annum, is the what? Is the rate, or should I say the interest rate the Bank of Ghana is going to charge this commercial bank if they come for loan. Are you good with that? And if this commercial bank comes for loan, you the individual, you don't go and borrow from central bank. No, you deal directly with the what? Here are the public. In the public, you deal with these commercial banks. Are you clear with that? So if I am borrowing at 16.5%, that is the commercial bank, then I want to give it as a loan to the general public. Don't expect me to what? To also use the 15.5. Because these people, they are also there to make profits. So expect them to add a little something over 16.5%. Let's say even 17%. Are you clear with that? So let's say they are lending at 17% to the general public. Let's say that's what it is in the system. Now, let's see how the central bank controls or use the policy rate to influence or to control inflation. And that's what he asked, right? If I am asked.
Yes, sir. Yes, sir. Yes, sir.
Good. So let's say there's too much inflation. There's too much inflation in the system. At this policy rate, that's 15.5%. There's too much inflation in the system. And you know that inflation means that prices are rising. And why are prices rising? Prices are rising because people have too much money. That's why I said fewer, more money chasing fewer goods. Meaning that people have more money, but the goods that are in the system, they're not enough. You get it? They're not enough to meet the demand of these people. That's why I said more money chasing what? Fewer goods. You just making assumptions so that you can understand where this 15% and 17% being led to the public, there's too much inflation in the system. And the central bank would like to control this inflation. What would they do? What they would do is that they would have to increase this rate, this policy rate, to let's say 20% or whatever rate they want to control interest. Let's say carry that 20%. So if they increase this one to 20%, what will be the effect on the commercial banks? Good. The effect on the commercial bank is that now they were initially at 50%, but now the rate has increased to 20%. Meaning that they will pay more of the interest. Meaning that this amount of more, this loan they will take from the bank has become expensive to borrow. So one effect it will have on the commercial bank is that it will discourage them from borrowing. So as it discourages them from borrowing, meaning that they are not going to demand more money from the central bank any longer. Are you good with that? Good.
Yes, sir.
And let's assume that even if you go and borrow at 20%, this 17% must change. They must also increase theirs to let's say 21 or 22%. And now, with the general public, it has become expensive for you to also borrow from them. Are you good with that? So now, if that happens, it decreases or they cut off the supply of money in the economy. Are you clear with that? So meaning that we will have fewer money in the economy. So you will not be able to, or you wouldn't be in that position of having more money to demand more goods. So prices will fall. Are you clear with that?
Yes, sir. Yes, sir. Yes, sir. Yes, sir.
Okay.
All right. Thank you very much, sir. Thank you.
You're welcome. Someone with Isaka Abubakar. Mr. Isaac Abubakar, please, I'm listening to you. Any other question? Mr. Adam Suleiman. If we raise your hand,
Good afternoon.
yeah, good afternoon. Yes, madam, please, you are listening. Oh, Mr. Suleiman, we've lost you. Please, do you have any question? You have other ones there. I mean, your manual, I think you have you have a purchase agreement and a foreign exchange. They are the same thing. The purchase agreement, they'll go into agreement, the Bank of Ghana will go into agreement. The purchases, like they give the right to buy the thing back. So they'll normally buy it from you. If they buy it from you, and they are giving you more money. But if they would like to control, they give the amount of money supply, then they will require you to come and buy from them. Then that's what I'm. So and I just play around it. Yeah, open your mind and read around it. You are very, very practical, very, very practical. Yeah. Do you have any question? If there are no questions, then we are done for unit 3. Any questions so far? Any questions? And please bear in mind, kindly go and read more on the listening requirement and the listening rules. I guess some of us here would like to one day be listed in, have our companies listed on the Ghana Stock Exchange, or maybe be a consultant here. Can be giving expert advice and stuff on how to be listed and the requirements. So let's endeavor to read this one. Madam Lady, a person, I'm listening to you.
Please, I'd like to know if there's a particular monetary policy that the Bank of Ghana uses, or they can use anyone at any point in time.
Yes. There's no particular one they use. Anyone that they think will favor them or will work, then they use it. There's no particular one. That's why we have several of them. So if you use one and it doesn't work, you can use the other one. You get it. So they keep on blending them. So there's no particular one they use. Very good.
Yes, sir. Thank you.
Okay. Okay. Yes, please.
So please, we need regular students the past questions. If we have some, keep coming in our papers.
Okay. But okay, well, I'll find out from Madam.
Okay.
Okay. Yeah, I'll find out from them. Okay. Mr. Isaka, you wanted to speak back?
Yes, sir. Sir, please. You were saying that when the inflation is high, the central bank increase the policy rate, like the interest rate, so that it can control the money in the system. But sir, in 2023, the rate was high, and so the inflation was also high. But now the policy rate is 15.5, but inflation too is also down. So I'm just a bit confused.
So now I understand analysis is made. So now what point are you trying to come across that
they should be low. The policy rate should be low.
Yes, as like you explained, I
What
think
what
someone asked a question.
what if they bring it down? If they bring it down, there'll be inflation. You see now, inflation is okay. Like it's okay, 3 point something, it's okay. Or it's not okay
Yes,
for you.
it's
Yeah.
okay.
So if you are saying that because inflation is down, then they should bring the policy rate down. Do you know the effect? The effect is that more money will be pumped in the economy, and that inflation rate you are seeing will also rise.
No, sir, no. My argument is, in 2023, the inflation was high.
But 2023, I'm not trying to sound politics here, but who were those in government? Who were those in power? Your finance minister has run away, like he's done somewhere there. Even though, yeah. So I'm not trying to sound very political, but how they manage it. I mean, price was so much. Price were just high, like I don't know how they manage the economy though, but they call themselves economists and stuff. I'm not trying to sound political here, but yeah, thank you for your submission. But I don't know how they were doing it. Yeah, things were very, very tough this time. Yeah, maybe for their own, it's a system, man. That's one thing.
Means that the fundamentals was weak there.
Hey, please, don't say that. Don't say that somewhere. We are not trying to sound politics here. Yeah, but anyways, the economy was very, very hard. You get it?
Okay.
That time the economy was things were really, really expensive, and we had a hike in prices and stuff as compared to today. Any questions so far? Any questions? Because I would like to, if there are no questions or Isaac McCarthy. Yeah, Isaac McCarthy. Yeah.
Please, with the special deposits, where the central bank mandates the commercial banks to deposit a certain percentage with them just to control their borrowing or their lending.
That's the reason requirement.
Yeah. Usually, is there a fixed rate or percentage, or they just determine that themselves? I mean, the central bank. Yeah.
I think currently, I think it's paid at 90% or something like that. 90%. Yes, currently it's paid at 90%, but as to it depends, and I think it's not fixed. Yeah, I think it's not fixed because it's also a tool to regulate the amount of money in supply. So if they would like to also increase, it's also a tool that they can use to also increase the money in supply. You see, we saw an example. I don't know whether you got the example yourself.
Yes, please, I got.
Yeah, how they were using. I was using this calculation to do it. So that if you deposit 1,000 and the reserve ratio or the cash reserve ratio is 90%, mean that you get to keep just 900 cedis and you just have 100 cedis available and stuff. So if they would like to increase the amount of money in supply, they will rather want to reduce the reserve ratio or the reserve requirements and stuff. So the same thing, they play around it. Yeah, they're always
okay. Thank you.
Okay, you're welcome. Justice Robertson.
Yeah, hello, sir.
Yes, please.
Please, I'm making a personal appeal. I don't know if my colleagues will join. During the evening class, we solved on bonds. And during that time, I think most of us weren't by our books and calculators. So I don't know if we are not supposed to meet next week Sunday, but if you could humbly help us with going over the bond calculation again, I'll be grateful. I don't know if my colleagues subscribe to that.
Oh, okay.
Then so
you.
Yeah, I second.
Yes, kindly have a discussion with them and let's see if they are all agree. You can come and give me the time and the day you like us to meet so that I'll come up with some questions. We will also them together.
Thank you very much.
I think let's try this. Let's try the evening we can meet. Yeah, so let me know because I think the other time this Friday, I don't know. Most people didn't join the class. It seems you agree by tomorrow or Tuesday, let me know that the class will come on Friday so that
Okay.
I get some questions and we all go through. Mr. Aponsan Isaac Farming, do you have something for us?
Yes, sir. Sir, please, I want to ask, for instance, I'm a customer to say GCB, and then I bought a treasury bill at interest rate of 11%, right? And then per the monetary rate that we are talking about, if it's increase or decrease, is it going to affect the interest rates that customer will get? I want to know whether it's going to affect it, because if the interest rate either it's increase or decrease, is it going to affect the interest that the customer will earn at the end of the
Okay. All right. Thank you very much. Good. Let me expand your question. Let me add one to your question. Good. It's going to, you should have asked that, is it going to affect it as in terms of changing the interest rate at 11% or not? You get
yes.
it? Or
yes.
it's going to affect your purchasing power. Let me tell you one thing. If it's a 91-day bill, and it is, let's say, 91-day bill, treasury bill at 11%, it's 11%. Nothing changes. It's fixed. But you have to check whether the real value of your money, the real value of your money. That's when I say the real value, I'm looking at the purchasing power of your money as seen, because if there's inflation in the system, then it's going to affect the money you're going to receive at the end, even though the interest is going to remain the same. Let's say at the time you were buying the pen, it was 11%. That is in 91 days, 3 months time, it will be at 11%. You're going to earn this 11% on it. And inflation has increased. You know that what you used to buy at 5 cities now, you wouldn't buy it at 5 cities now. You buy it at let's say 10 cities or something like that. Even though it's at 11%, but the real value of the money has reduced. Are you clear that?
Yes. Yes.
Yes. So in the end, it's going to still it's going to affect it. It's going to affect it's not going to change anything like the 11%, but in terms of real money terms, it's going to affect your money or the amount of money you're going to get. Thus, you're not able to receive or buy that same good you're able to buy with that money again. So in terms of the purchasing power of money, it's going to affect it. But as your interest is going to remain the same. So in the end, you are still going to be affected. I'm good.
Okay, so yeah, sure. I'm good. All right.
Okay. Mr. Abel. Is it Abel? You have a question?
I'm not asking a question. We joined this class late, so we don't know if there is a group that we can join so that any information that has been.
Please, there's some noise in the background, so can you please position yourself? Or I can't really get you.
Yeah, I'm asking if we joined this class late, so just it later. And today it's even the first ending. I don't know if there is a group for the class where information are being passed so that we can all carry it along.
Yeah, but I'm a part of any. Which center are you, please? Which center?
Tamale. Yes, please.
Please, is there anyone in Tamale here? Anyone here?
Yes, please. Yes, please.
Do you have a group? Kindly add him, okay? Kindly add him into the group so that we
Sir,
can
please,
follow
I'm
along.
also going through same problem. I'm in Takrade.
Okay.
Bumper. So if somebody is within this group, you should help me out, please.
Please, for Tamale, I don't think we have a group for it, please.
So, Tamale, can you please meet after the class? Probably you can create a group, a WhatsApp group for yourself. Something like that.
Okay, sir.
Yes, I think that's all it helps so that should there be any information, it can easily be circulated in that group. So
anyone in Takrady, please.
anyone in Takrady, you can. There's a chat box over there.
So please, Tamara, who will be our listener? Our Tamara, who will be the
Please,
so that the person will just do the number.
no, please, for that one, it depends on you. After creating a group, you can, among yourself, you can select one of you to lead the group. Also, to make things simple, there's a chat box over there. So if you like to create a group, someone should, let's say family, you can drop your number over there. Then you add your number plus family over there so that another person can pick it up right after the class. Because right after the class, no one is going to just end the class. No one is going to see each other again. So in the chat box, just come and type your name, maybe your name, your telephone number, or your WhatsApp number. Then you add your center family over there. Just one person, so that another person can pick it up. Then you guys can create a group. How you good? Yes, please. Mr. Eagle, please, do you have another question for us? The contribution or suggestion?
No, please, I don't.
Okay. Please kindly do that. If you want to do that, kindly do that. Those of you, I don't know how you are going to communicate, but I can kindly use the chat box over there to do that. Maybe a rep from Takrady can just type your number over there in the chat box so that someone can pick it up. Those in Takrady can pick it up and you can add them to the group. Or if you don't have a group at all, you can create one for yourself. Or if you have a group link, you can also share it. Yeah. If you have a group link, you can also share it. The leaders, if you have a group link, you can also share it. All right. I think that's all. So see you, God willing, on Friday, right? For the calculation. So Friday will be calculation. We go through all the calculation, the bond and stuff, how to find the bonds. All right. So please have a nice day too. And thank you for coming. Okay, bye.
Thank you.
Thank you, sir.
Thank you, sir. Hello, Abel.
Yes, please. I would like to know if someone is from Takrady because I'm going through a lot. If I can get help from Takrady, I don't know.
Senior, are you the only one at Takrady?
Alleged we are two, but I don't know the other person.
Hello, members. Please, can we just have a group for the distance?
Oh,
For
Charlie.
the class, not for a distance centers. Because if we are to follow centers, some of us, our centers, we are 2, 2 or 3, 3. So it will not be going well for us.
I think the class is all
So the class will just have a group and we all
One
together.
group for the entire class.
Yes, one group for the class, not for centers, please. Can we do that?
Yeah, that would be great. That would be great because
Yes.
me, for
So please
instance, I'm in
let us
Takrady
do
and we
that.
are just two. So I don't know
And
the
we
other.
too, we are in Tamale, but we are 2 or 3, 2 or 3. So once we have a group for the distance, the class, we can all join together. If something is going on, we all know.
Yeah, that
So
would be
please,
great.
someone should just drop his number to or a link for us to join so that we all join together, please.
I think one person should volunteer as a class rep and drop the number in the comment. We'll contact the person via WhatsApp. We need to create the group. And anyone who contacts the person, then he will add each and every person on the group.
What about the what do you call it? The link on the timetable, the WhatsApp link on the timetable. What is it for?
I don't know whether it's working. I've tried it, but I'm not seeing any response.
Yes,
I
yes,
too,
it's very true. I've
I've
also
tried
tried
it,
it, but
but
it's not working.
It's not working. Maybe it's just there for fun.
Okay, so please let me mention my number again so that you can send me hi on WhatsApp, and then I'll send you the group link. Then you join.
Pen.
Okay.
So let me mention the number.
Okay, let's go.
Okay.
054
054
79
79
33
33
202.
202.
Yeah.
Please then leave.
Yeah, so you send me a hi on WhatsApp, then I'll send you
Okay.
the link so that you can click and join.
Okay.
Okay.
We appreciate
We'll do just that right now.
Okay. Okay.
Thank you.
You're welcome.
Moreover, to I don't know if I'm in Takrad, as I was saying, I'm in Takrad, but I want to know the other colleague. I don't know if he joined today or not. So if he joined, he should identify himself so that we can link up. Okay.
But I think we have online classes. Like we have a WhatsApp group already. That's level 300 finance online group.
I think that one is a general, what they call it.
Yeah, it's a
WhatsApp
general group for all the
level 300.
finance students. But which group is he talking about? That you have to get
Yeah, I think there's a general group like that, and that would have been okay. It can serve whatever purposes that we.
So the
Yeah,
group is there already. I think we are about 48 members or so, created by Elizabeth.
so,
Yeah, so that is the one I was talking about.
I'm not part of that group.
That is the one I'm talking about. So it seems some people are still not part.
Okay.
That is why I told them to text me, because I'm an admin.
Okay. Because
it seems some people are still not part, because there's another group there that is general, but that one, it seems it involves accounting students, not purely finance. That is why the other one was created with 48 or 40 something members.
Yeah, 48. Yeah,
that is purely
that one is
finance.
only finance. Yes.
I think that one okay.
Yeah. So those who are not part, that's why I mentioned the number, so that's yeah.
So Mr. Aduma, I'll
So
give you
the
a hi right
concept,
now so that you can add
so
me
that
up. Okay.
I can give them the link so that they will join.
Yes.
Okay.
Well, we picked up the person we have contact the other person, right? Yeah.
Mr. Tamaleman, your name, I want to hire you on WhatsApp.
Abel.
Hello, is it
Abel?
Eben?
Yes, Abel. A-B-E-L.
Okay.
The invoice, just got my number. Maybe you can just
Yeah, hello, Mr. Adam UCC. Please, I just gave you hi, so you can just add me up, please. Is it Adam or Adam? Okay, it's Adam. Please, the name is Adam, right? Mr. Adam, the administrator. Hello. Hello.